Thinking Byzantine here, and today we'll be talking about 3 stocks that did well in 2020, and then those 3 stocks tanking in 2021. Feel free in the comment section below to make your guesses what 3 stocks I am talking about. And speaking of tanking, the S&P 500, Dow Jones, and the Nasdaq, they're all down today. From, there's talks of Omicron, and then there's Jerome Powell's talks about tapering and inflation. And then there's just generally people selling, losing positions for tax purposes. That's just my take. Or it could just be general trading. It doesn't really matter to me. The S&P 500 in the market in general moves up and down frequently. So until something substantial really happens that tanks the markets, I would not be worried. In the short term anyway. But let's just get away from this rambling and just get on to the main bit topic. So, sorry about that. And first off, let's talk about Peloton. Now, what is Peloton? Peloton, they're the company that makes those stationary bikes. People during the COVID shutdown, they wanted to work out at home, so they bought stationary bikes. From January to near the end of 2020, Peloton was up 431.76%, which is very, very impressive in terms of 1 year performance. But the next year, from that time to now, they are down nearly 75%, or actually closer to 73%. So that is rather lackluster, to say the least. Well, this big dip here was mainly because of those terrible earnings. And if we can go here, and I'll just show you how bad their Q3 earnings were. And we can see here, negative 376 million. And if we go back, they're still losing money. Here, even when they have a lot of revenue flowing through the company in Q1 of 2021, they're still losing money. Peloton as a company is a money loser currently. And it seems like from March 2021 to September 2021, their situation has not improved, and accordingly, the stock price was punished. And another thing you have to keep in mind with the stock price is that it dropped further when Peloton did a stock offering to keep their operations afloat. How Peloton intends to become a profitable company, I'm not sure, but in general, Peloton has really had a roller coaster of a ride. But then again, these 2 other companies had the same type of ride. But it's quite interesting that this right here, this dip from October to now, this 1 month period, it dropped 52%. I forgot what happened at the end of October, but in general, people are not as hot on Peloton as they were before. So let's go to our next stock. Zillow, this real estate company, they did used to buy houses, but we'll get into that in a second. You know, they have their little online thing where you can look at your, you can look up your house and see how much Zillow thinks it's worth and all that. But from the beginning of 2020 to their peak, Zillow was up nearly 300%, no, 350%, over 350 actually, which is, like I said, very impressive. But from here till now, it's just been disappointing to say the least. And they're down from their all-time highs to current price of $54.11, around 73.34 percentage points. But this big drop here, I remember what happened here. Zillow dropped iBuying, and you can go to this article or any other article to get other people's opinions or why they dropped iBuying, but it was a flop basically. And then they sold off some of their inventory. I'm not sure for how much, but I'm presuming pennies on the dollar for what they paid. So overall, a big oof. And then the earnings were not spectacular as well. Well, this quarter's wasn't. This one here looks okay. Now let's go to our next stock, Teledoc. So let's see, this stock is like a virtual healthcare company. People are at home, and they need healthcare, and with everyone cooped up inside and not wanting to go out, this company should theoretically do well. And their stock price really did do well. From near the beginning of 2020 till around the fourth quarter of 2021, they were nearly up. I lost it, but they were nearly up around 250%, which is rather good. And then from here, they're at the high to now, they're down around 65 percentage points, which is not great. I'm guessing their income wasn't that good. Let's just go to the earnings to see what they say. And earnings are negative. You can tell this is a trend that a lot of these companies are not profitable currently. Though at least with Teledoc, from what I'm seeing, in terms of net income, it's steadily going up. So maybe Teledoc has potential to become a rather profitable company in the future, but as of now, they're still not profitable. But we'll see. But in terms of overall percentage, Teledoc is down the lowest, which may indicate that maybe people have a bit more trust in the company than these other two. But we'll see as time goes on. Other reasons why these companies could be doing rather poorly these days is the fact that the Fed may be ready to raise interest rates and tapering and all that stuff. And how does raising interest rates affect these three companies? Well, currently, based on their Q3 2021 earnings reports, they're not making money. So the way you raise capital is you can sell preferred shares, common shares, and you can also issue out bonds. And if you're going to try issuing out bonds or preferred stock, they're affected by the federal interest rate, mainly because of the risk-free rate. Now, what is the risk-free rate? So the risk-free rate is the theoretical rate of return on investment with zero risk, and usually those are treasury rates. Some use the 5-year, some use 1 year. It really depends on who you ask what the risk-free rate is. But in any case, as the risk-free rate goes up, stocks have to be discounted, which means stock prices would go down in the short term. So maybe that's another reason why these stocks are hemorrhaging a bit, as these are the type of companies that would be affected if interest rates go up, as they are unable to finance their operations with debt. Now, with that out of the way, I'd like to ask everyone to like and subscribe if you like these types of videos. Tell me what type of videos you would like to see. And what are your thoughts on these three companies in general? Quite frankly, I'm not invested into any of these companies. I don't really have an opinion on these companies. Just besides the fact they're not profitable, so something I'm not interested in terms of investment, but just let me know what your guys' thoughts on these companies. This is Thinking Byzantine, and have a good day.